Good morning, ladies and gentlemen. How is everybody doing today? Hopefully very well. Yes, I am glad to be back. We're back. We're in the office. Wasn't online for the past couple days, as many of you guys probably noticed. Was on a Father's Day golf trip. Was away for the weekend and into yesterday too as well. So we're back. We're home. We are ready to go. So anywhooser, good morning, guys. So there's a couple things to talk about. Specifically, I'd like to kind of touch on BYND. Would like to touch on the market, and then kind of talk just to, kind of mix in a little bit of the FOMC meeting with the SPY talk. Let you guys kind of know my thoughts on it and how we're looking. All right. So something I didn't put up is AMD. I'm kind of watching AMD. Again, I just got back from a long weekend. I haven't been around Monday, haven't been around Tuesday, so I haven't been in the mix for the first couple days of this week's market movement. So coming in today, trying to hammer it, you can get caught off guard really easily. So today, I don't think I'm going to press too hard. I'll probably just kind of sit back and watch, maybe make a couple trades here and there, but probably not going to press very hard just because I haven't been around Monday. Haven't been around Tuesday, so I haven't really known what's been going on and how the market's been moving. So I'm not up to speed, right? So it's never good to come into the market, go balls to the walls when you don't even know what the hell's going on. So I'm gonna probably relax it on the gas pedal today. So let's get into it. So first things we'll talk about here is BYND. All right. First and foremost, the most important thing that everybody needs to know about BYND is that beyond them being a plant-based burger, more importantly, the stock is a bubble. For those of you that tell me it's not a bubble, please go and watch all the videos I made about Tilray back like a year, maybe 2 years ago now, maybe a year and a half ago. And if you can, read the comments, because everybody told me it wasn't a bubble when I told them it was a bubble. So not here to play the who's correct game, but if you're not aware of what bubbles look like, take some time to research them and understand them, because that is exactly what this is. And when you understand what a bubble is, it becomes really predictable on how to trade one, okay? It's easier to trade the back side of a bubble than it is the front side as of right now. If you've already been in and you're kind of holding on BYND, fantastic. But it's not wise to be buying BYND with the outlook of holding BYND, because the likelihood you win will be far less. You can trade it because you can always get in and out of trades, but to buy and hold at a price of 200, that's kind of scary. Even above that, it's kind of scary, right? So they become really predictable when they crash, okay? Good morning, Brad. Brad, I will be hitting you up. I will contact you today. I just got back from a golf trip, long weekend, a lot of booze involved in that one. So I will contact you here a little bit later today now that I've recouped. So good morning, guys. Yes, good morning. All right, so it's definitely a bubble, right? And I'll do some more videos, and I'll try and keep everybody up to date on BYND and in the way it's going to move, because I've already been, for the past 2 weeks, maybe a month, I've already been planning a trade, just been waiting, just watching it. I've been watching and just letting this bubble grow and grow and grow, because once it crashes, it becomes really predictable, and I've been waiting on this play for like a month now, right? So if I hit it, it'll be a nice win. If I don't, there'll be another bubble. So it's not like I'm going to get FOMO and try and jump in even if I missed it, right? So with that being said, BYND is a bubble, and I will give you guys some information right now. It could change, right? It could all change, but let's say that right now or yesterday was the start of the crash on BYND, or the really significant pullback, or the bull run of BYND is finally over. You should expect that the price of the stock will probably come all the way down to about 100, or what was it, 100 or like 120? I think it was, when I read, anyways, the price should come down to about 100 to maybe about 120, and then it would bounce. If it goes to 100, it's going to bounce from about 100 to like 135, potentially 150s area. If it pulls back to 120, it's going to bounce up to like 140, potentially 160. And then once it gets to 160, 150s right after the bounce, it's going to fade all the way out on usually a pretty consistent downtrend. So there's two ways to go about playing it. You let it crash so you can be early, right? You can trade the panic crash, which is always a little bit harder to do because you never really know where the top is for sure a lot of times, and then you're kind of just jumping in the middle of a crash. So again, it's kind of harder sometimes to get the front side crash. Easy to get the bounce because once it crashes, you know it's crashed, so you just kind of buy the bounce. And then it's really easy to short the top because it never makes it back to always, any bubble never makes it back to the previous high. So as soon as it tops out, starts to roll over, then you short the top and ride the backside. So for me, whenever it comes to bubbles, it's usually easier for me just to kind of try and trade the backside than it is to get myself involved with all the FOMO on the front side, because the front side is all pure speculation, FOMO, people having no clue what it is they're even buying. Half the people think they're buying real burgers. Half the people think they're buying vegetarian-based burgers. Other people think they're vegan burgers. I don't even know if it's a real thing. I've seen it once in my life in a store. So again, it's all speculation. So the front side's always a little bit harder because really it's like a bunch of blind assholes running around in a circle with their hands up their ass trying to find a dollar. Really, that's what it comes down to. So the backside is where more of the intelligent traders come in and go, okay, we know what's happening. Let's try and trade what's more predictable. So for me, let's try and trade what's more predictable. So we'll be watching the backside. All right, enough on BYND. All right, now let's move forward to the SPY. Excuse me. So here we are with the S&P 500 now. So we've had this really big bounce, right? We've got this really big bounce right here. And this bounce came based off of some technical levels, right? The most recent bounce in the market, it came from some technical levels, and it also came because there was talks and there was rumor. Remember, buy the rumor, sell the news. You've heard that. Rumors that the Fed would cut interest rates by about 50 basis points, right? Or in layman's terms, they're going to cut interest rates. Interest rates are going to become lower, right? So it costs less to borrow, right? When it costs less to borrow, companies are more incentivized to take money to build a business, right? Or take out loans to build businesses bigger, right? The more money you take out, the more you put back into the economy, the more stimulus is there, the more the economy grows, the better the economy is supposed to be, et cetera, et cetera, et cetera. You get the point. When interest rates are raised, everybody has to pay more money. And when everybody has to pay more money, they have less money. When you have less money, then you go through the shrinkage period. So people don't like high interest rates, okay? I don't want to pay high interest rates, right? Imagine paying, 50% on a loan. That would suck. You take out a $10,000 loan and you're paying 50% interest. I mean, that's astronomical. Who on earth would do that, right? But I would much rather take out a $10,000 loan and only pay 1% interest, right? That makes sense. I could do that, okay? So with that being said, the bounce here was pricing that most likely this big bounce you see in the market was the market pricing in the Fed's cutting interest rates, right? Not waiting until they say, yes, we're going to cut interest rates, but pricing in that they would. So a lot of the move, if interest rates get cut, have already been priced into the market. And anybody who buys on the news that interest rates have been cut is most likely buying the top. So if Fed FOMC meeting today all goes well in terms of they do cut rates, we're probably going to see a short-term FOMO panic buy to the upside that honestly could even press us into all-time highs or really close to all-time highs, just over. But we might see a form of a panic buy that presses into all-time highs, right? But again, do remember, you're still probably buying the top of that move, right? The market is probably already priced in the rumor or the news that's supposed to break today, okay? We decided to do a video. Mike? Yeah, I do like to do videos. I've done thousands and thousands of videos. So if I haven't been around, I apologize. We all have a life to live. Just remember that. Yeah, I've done a couple meet and greets. I'm not some astronomically famous dude, so it's always kind of hard to do one of those and get a nice crowd going. So, every once in a while, I'll kind of stop and say hi to a few traders, depending on where we're at and different trips and areas that I go to for sure. So the SPY, again, don't be surprised if we see an all-time high push. Now, people would ask me, Connor, what do I think about the market now? Well, based on a monthly chart, let me do this. Monthly. Where'd you go? 1 year, 1 month. All right, so if you look at I don't want to do that. Let's do a couple of years. So if you do a monthly chart, right here, this is actually a very bullish setup so far. Of course, it could change, but right now, it's actually a pretty bullish setup because we have this really bearish engulfing candle, and then the following candle is a really big green one, which could very easily turn into a bullish engulfing. If it turns into a bullish engulfing, we're probably going to see a form of a panic buy into all-time highs. Now, I still would not be buying that market, okay? How many of you guys intraday, and the reason I say intraday is because we see them a lot of times intraday. How many of you guys have seen intraday a stock go running up like crazy, right? Pulls back, bounces, pulls back a little more, bounces a little more. Then all of a sudden, late day, it has this really big squeeze to the upside, and then it crashes fully, right? A lot of times we'll see that. We'll see like a penny stock or just a stock in general have this really big move up, and then it drops out, pulls back, and then it forms a nice kind of like ascending wedge, and then it squeezes all the shorts up, and then it drops out, okay? There's a good chance that we're seeing or could be seeing, if we break into all-time highs and go into a nice run, the last run of the bull market. A lot of times that's what happens. If they don't immediately top out, roll over, they go for one last hoorah push that squeezes all the early shorts out of the market for the last push, brings in fresh new buying to sell to, and then the market finally can give way. So it's very possible we might see that. We might see last form of a hoorah push into all-time highs, and then we might be done. But again, it's not a market I would be buying. I would never be buying these high markets. It's just the value isn't there for me. It makes sense to ride the wave, but not add to, right? Not add to. Again, I like riding the wave. I don't want to be adding to it, right? Like, let me ask you, for those of you that are surfers out there, or if you've ever tried it, right? Or if you've seen the movies, you try to get on the wave as it's forming, kind of ride it, right? It'd be really, really, really stupid to try and get on the very tippy top of a wave as it's rolling over, right? That would basically mean you're just going to get crushed, right? So it's okay to be on the wave and riding, right? And letting it kind of just crash behind you because you're already kind of well off, but to get on the very tip top and then try to ride down, well, you're just going to get smoked, okay? You might be able to ride it for a little bit and things may feel good, but sooner than later, that thing's going to roll over and it's going to crush you, okay? So, to answer your question about the gold, Fed, yeah, so really the gold market is very closely tied to the dollar, right? So the best way to go about, from the general standpoint, gold, dollar, is you want to see how strong the dollar's doing. If the dollar is usually down on the day or weaker over the week, gold will tend to be up, right? And that's generally it. Or when the economy starts to get shaky, a lot of times you're going to see people start rushing into gold or precious metals and for so on. But you really want to track the U.S. dollar, and that's going to help give you a better idea as far as how gold will play off. That's actually a good question. I wonder how gold's doing right now. Let's see. Down a bit today, so we actually were seeing something interesting. I think we're actually seeing the dollar rise and gold go up, which was very, very interesting. Okay. Zoom, I haven't looked at Zoom in quite some while. MLNT, I'll touch on this real fast. We have about 10 minutes before I got to get back to our private trading group. So it's up to 384. Looks decent. If it had a really explosive day, 200 moving average is at 11, 10. I wouldn't trade that. Yeah, no, I'd probably just not worth trading out of the gates. So this is cool. It's going up big. It looks really good, but it's not good setup. It's a terrible setup to be trading right now. This is really something you just want to let it go. Just let it keep going until it crashes. Once it crashes, then it becomes interesting to trade because then it becomes more predictable. Right? So in a situation like this, it's going up. Beginning of the bell, they more often times than not, right out of the get-go, they're going to crash, or they might spike a little bit, then they crash. The risk is not worth the reward on the first couple minutes. You're better off seeing if it pulls back, then bases and forms a U, and then trade it as it rips back up, right? So you're really looking for kind of like a U-shaped formation trade, which is also called a red to green move. That's what you'll be looking for here today, most likely on MLNT. If it starts going out of the gates, that's great. Don't chase it. Let it go out of the gates. Then let it pull back. If it can pull back and sustain its move out of the gates, then it has potential to keep going. If it squeezes up out of the gates, pulls back, and then starts just going down, well, then you know it doesn't have potential to run. Over to Zoom, ZM. I would probably be long bias Zoom for the day, at least today. Makes sense. Probably be long biased, right? Because if you look at the chart, you had this down day, you had this relatively kind of down day, then you had this one, and we're getting bought up. Right now, it looks like it's curling. It could very easily change. The setup, the formation isn't quite there and quite super obvious to most. But if it starts getting over 101, it's probably a long play for the day. So again, I'd probably be more long bias on Zoom today. It's had 3 attempts down that keep getting bought up. So now it kind of seems like the likelihood of the day is at least give an attempt up, see if that works. So yeah, I'd probably be long bias Zoom today. Only penny stock that I see worth watching is going to be MLNT, which we've already gone over. But MLNT, which today the setup isn't even that great. It's just kind of going up. The setup for the play isn't even all that great here. MGI, that's MoneyGram, right? Is that MoneyGram? Yeah, they had like a deal with Ripple, the cryptocurrency or something like that, I believe. you know, everyone's all hyped up on it because it shot up yesterday, the deal with the cryptocurrency. It's worth watching for sure. Yeah, it's worth watching. I'll just come on and say it's worth watching, but actually, let's find out. Let's see what happened here. 143 up to 4 and down to 2. Yeah, it's worth watching, but no, there is no buts. Actually, yeah, it's actually probably, it could be a long setup that I'm just not seeing very good. I don't like the way it pulled down here and the way it's inching up, but I don't have my drawing tools up right now, but we can actually see a form of an inverse head and shoulder bullish kind of formation. So I'd probably still watch it long bias for now until it starts dropping out. Once it drops out, then just cut it off, but it's probably worth watching long bias still. So if you go from, you know, this top here, 405, draw a line this way, draw a line that way, draw a line this way, draw another line up like so, which it's kind of an awkward formation. It's not fully there because really we're supposed to pull back, but more like draw a line here and then go one down like that, then another one up like this. You could be seeing a form of an inverse head and shoulders where this one just got overbought, right? So we kind of have, you know, some type of formation. It's not the greatest, so maybe this move up here at 415 was a little overdone for it to be the inverse head and shoulders pattern, but we might be seeing a form of it. So I think it's still worth watching long bias until it drops out. If it drops out, then screw it, right? How about BP? D Nice? Yeah, I apologize that so many of those messages you were sending got kind of taken out by the Nightbot. I could probably go in and kind of edit some of the criteria it searches for. So I do apologize about that. BPMX. Last time I remember BPMX being a sub penny stock, really cheap. Yeah, it's 90. Oh, it's not too cheap. It's 91 cents, so it's almost $1. I mean, this actually has a really good looking curl, but you know, if there's no news, then nobody really pays attention to it. So, I mean, it could have a nice little move up, but personally, I wouldn't, I won't trade it myself, and there's no news on it today. So there really needs to be some type of catalyst to bring people's attention to that stock. Without it, nobody's going to focus on it. If nobody's focusing on it, there's going to be no volume. If there's no volume, there's going to be no move. And without no move, there's going to be no money to be made. So you need some type of new news catalyst to bring some people's attention. Oh, ADBE earnings or will be earnings. Yeah, so ADBE looks pretty good. It actually had an inverse head and shoulders pattern right here. Boom, 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 and now we're up. So anyways, it's right at the previous top. Now, in a normal situation, I would say don't long it right now because we are at the previous top, which means we're more likely to pull back. So I'm going to say that. Probably not the best time to long because it's its first attempt at the 52-week high. The only difference is it's not coming off just a simple down dip up to previous highs. It's coming off a down dip, inverse head and shoulders off a good earnings. So it's a little bit different of a situational scenario, but still probably wouldn't long it at this top. I'd wait for a pullback, consolidation, then I'd be long for the break into all-time highs. If it does break into all-time highs today, I would only be long on it if it pulls back, holds all-time highs successfully, and then you can see that it broke all-time highs, is holding support, and it might be ready to go. SPWR up huge yesterday off an upgrade. Will it pull back? Give me a crystal ball, and I'll tell you for sure. Let's see. I say SPWR. Well, I generally never trade off of price upgrades, personally. Well, I mean, like I do, but I don't, right? There's a way that I go about thinking on it. Yes, it will probably pull back today because it's already pulled back today. It started with the gap down, so it's already pulling back today. Wouldn't be surprised if we see a pullback just a bit more. Yes. AMD, I would probably be long bias AMD today. I wouldn't be super crazy about the long, but I'd probably be long bias. All right. Anyways, other than that, guys, that's all I have for you this morning. I got to get back to our private group and relieve one of our admins from our trading room so he can get into his own trading room. Anyways, thank you guys again for tuning in. We have a pretty good amount of people here, so if you guys could give it a thumbs up before you head out the door, we'd really appreciate that. It helps the channel grow. It helps YouTube algorithm, however they do it. The YouTube algorithm gods will help promote the channel more based on likes and shares and whatever else, right? So like it, share it, subscribe, and I'll see you guys tomorrow morning for another trading day. Remember, FOMC meeting today. A lot of eyes are going to be on the market. Whenever we have an FOMC meeting, a lot of times the market can be kind of shaky, kind of choppy because people are just kind of sitting back waiting to see what's going to happen. So today might not be the easiest trading day. If you've been coming off of losses, take a chill pill. If you're coming on a green day, take a chill pill today because today probably won't be the most miraculous day for trading, okay? Everybody take care. No. I don't want to be the next Ross. Absolutely not. Nope. The only person I want to be is myself. So with that being said, everybody take care. Have a great day, and I'll see you guys tomorrow morning.